Hey, Scott, that's right. New capital raises for SPACs ground to a halt during the second quarter, but there's still nearly 400 SPACs in search of merger targets, which could drive $800 billion worth of deal activity. That's according to Goldman Sachs. Trouble is, the financing market that's used for most of these acquisitions has tightened, according to Gavin Baker. Now, he's the former Fidelity PM and CIO of Atreides. He says investors have become much pickier about PIPEs, or private investments in public equity, as accountants and attorneys changed the treatment of these as illiquid versus liquid securities. And of course, funds often have caps on how much they can invest in illiquid securities.
And that really froze the market, along with the fact, 70% of SPACs are trading at, 1050 or less, which is not a great outcome. And I think as that kind of pig of pipe commitments works its way through the proverbial python, you will see the market loosen up.
Baker's full SPAC comments and more can be found in our Delivering Alpha newsletter out this morning. Subscribe at cnbc.com/Delivering Alpha newsletter. Scott.
And Les, I just recall the conversation I had with Keith Meister, who announced his third SPAC on Friday with us on the show, who said there was too many SPACs, too many deals. He said it's an awful pipe market. It's an awful SPAC market. So that tells you how much the tide has turned.
And yet he's still going out with another SPAC. It's interesting because one thing that Baker said is he kind of broke SPACs down into three buckets. He said there are the unserious SPACs, there are the unscrupulous SPACs, and then there are the serious SPACs, which he attributes to well-known investors. I would presume that Meister would be in that camp.
Yeah, well, it's a tougher market to bring something to market, but, the good ones get through. Leslie, thank you.